Yo, what's up, guys? It's your boy Looney, and let's be honest, how many times have you opened your portfolio today? Was it once? Was it twice? 10 times? Yes, I'm in the same boat. I'll admit it. I'm guilty of checking mine way too much, especially on red days when you just have to see if it magically recovered in the last 5 minutes. But here's the thing. Constantly checking your portfolio might actually be hurting your performance more than helping. So in this video, I want to talk about how often you should really check your portfolio, why it's messing with your mindset, and what to do instead. Before we dive in, quick shout out to the Discord. It is free to join, and for $8 a month, you can get trade callouts, my full option selling course, one-on-one coaching, giveaways, and more. All the links are in the description. So why do we do it? Why do we check our portfolio constantly? Every time you refresh your portfolio, you're chasing a dopamine hit. You're waiting for that green candle. And when it's finally green, it feels amazing. And it's like you just unlocked a new level. And I'm sure a lot of people have been feeling that way these past 3 months. Year to date, I'm up pretty significant, 25%. But on the other hand, when you're red, it ruins your whole mood. You can see here I actually dipped quite a bit earlier this week, and then the month chart, you can see that massive drop on October 10th. But it is addicting because it kind of feels like you're doing something, but you're not actually changing your investments. You're just simply checking their temperature every few minutes. And here's sort of the danger of checking it, because the more you check, the more emotional you get. And you start overreacting. You end up panic selling, chasing green candles, which you should be ignoring. And actually, in fact, studies have shown that investors who look at their portfolios less actually make more money over time, simply because they give their investments space to breathe. And yeah, that's similar to the buy and hold strategy or mentality. And you just simply buy and you don't really care day to day. And I do that with crypto. I dollar cost average. So I don't need to be making sure the price is right because I just let it go automatically. But how often should you be checking your investments, your options, your stocks, and crypto? If you're a long-term investor, meaning, like I said before, you're dollar cost averaging into solid stocks, ETFs, or crypto, once a week is actually plenty. And that might sound crazy, but seriously, once a week keeps you informed without actually stressing you out. If you're a trader or you sell options like I do, checking daily is fine, but it needs to be structured. I personally do check a bunch. I also run a YouTube, so I'm constantly trying to post, and I have my socials, so that is part of the reason I am posting, or I am looking at mine quite frequently, but I do check it quite a lot. So ideally, you do want to be checking it, I'd say twice a day, maybe 3 times a day at most, once in the morning when the market opens, and maybe once when the market closes, and then sometime in between if you want to do a trade or not. And you don't need to be constantly refreshing during lunch, and no doom scrolling, because seriously, this app can be similar to doom scrolling like you see on X or TikTok, where you're just simply looking at your investments because you're not making any moves. And especially you don't want to be doing it on green FOMOs or panic selling, because the truth is the market's going to move whether you're watching it or not. And zooming in too much, like if you go to the live past hour chart, makes every tiny move feel massive. And what is the real cost of over checking? Because sure, I did mention that not checking too much is actually good, but what's the problem if you check too often? And the issue is when you check too often, you actually start managing emotions more rather than investments. You end up selling winners too soon, and you cut solid plays because of one bad day. And I am definitely guilty of that. I've sold crypto at bad times, or maybe not bad times, but I've sold too early. There's been stocks that I've sold too early as well. There's been times where I stayed away from buying and I stopped my investments because I was kind of scared of the market going downward, when in reality, I should be buying on those days. And if you zoom out and look at any sort of chart like the S&P 500, maybe not any chart, maybe if we look at something like Beyond, you might see something otherwise. Actually, let's pull that one up because this one has been all over the internet. If you sort of search this one out and zoom out, you're not going to see sort of the same mentality. But if you're pulling out like a ETF like SPY and you truly zoom out to the max year or 5 years, you see that these red dips that you're constantly checking barely even show up and they really aren't affected. But if you're zooming in every single second, it looks like the end of the world every time. And yes, if you're a day trader, you do need to be constantly looking, but I'm not a day trader. And day traders is a very risky strategy and very few actually are successful at it. But with investing, it should be like going to the gym. You don't need to grow muscle by checking in the mirror every 5 minutes. You grow by showing up, doing the reps, and letting time do its job. And your portfolio is the same way. The growth happens when you don't watch it 24/7. Because remember, when you're working out, you don't actually grow muscle until later or you get the repair. So here's my rule of thumb. And I'm personally trying to work on this as well. But long-term investors or long-term investments, you should be checking once a week. Review maybe once a month and rebalance every few months. If you're an active trader, you should be checking 1 to 3 times a day, and that's it. And instead of obsessing over your count value, focus on your inputs, how much you're investing, what you're learning, and if your plan still makes sense. Because consistency actually compounds, and anxiety doesn't, or it could actually work against you. It could compound in another way towards the downside or your downfall. So I know it's hard not to look at it. Trust me, I'm right there with you with that. But the less you check, the easier it is to stay calm and let strategy work for you. So yeah, I would say maybe close that app for a bit, take a walk, let your money do what it's supposed to do, work while you don't. And there's actually ways that I have let myself not checking constantly. And you can play around with notifications. Something like crypto, I've set my notifications to show up. It only shows changes of 10%, where before we're showing 5% changes, which I think is a bit crazy because crypto changes 5% every day. If we just look at something like this stock almost went up or down 5% throughout the day. So I changed it to 10%. That's only the only time it's worth getting notified. But I'm also setting notifications for stocks, and I set these up for my selling option strategy. So let's actually look at HIMS, or maybe not HIMS, but it's actually the leverage ETF of HIMS. And I do this with all the stocks that are on my watch list. So if you hit this bell up here and you go to indicator alerts, I've added a few indicators. And I've set one so that if it goes above the Bollinger Band or below the Bollinger Band, I get notified. And that's kind of when I want to sell calls or sell puts. And then if RSI goes above 70, then I'll sell a call. If RSI goes below 30, I'll sell a put. Yes, I have some buying strategies in there mixed as well. But these are the indicators that I like to have set, and I get notified. And I set it to the 1 day interval. So again, I'm not getting notified all the time. But HIMS, I got notified today. So what did I do? I sold a put, and I have not been looking at this chart for a while. I got the notification. I looked at the chart for maybe 5 minutes or less than that, maybe 2 minutes, and then I made a trade. Now, it doesn't mean I'm going in blindly with these trades. I'm obviously doing my due diligence with the setup and all that, but something like HIMS, leverage ETF, very risky. So I was very safe with what strike price I was choosing and what delta I was using. And because it was at the lower Bollinger Band and the RSI was low, it was showing signs of oversold. So I hope you guys enjoyed this video. If you did, leave a like, comment, subscribe, and until next time, peace.